Hello and welcome. Let's talk about gold, silver, and then into cryptos within today's video. All bets, trades of the like within each his own risk and their own reward. It is Thursday, the 18th of July, 2019. And I can call this a crypto video, but and I am, of course, but technically speaking, turning gold and silver into cryptos is not only, it's not a hard thing to do, it's actually a very easy thing to do. Okay, so the gold chart action, which had the breakout from this 18 average down here at the end of May. And at that time, and I removed the Fibonacci lines because I just feel like drawing on here. So I'm using this line instead, or this index instead, which is XAU. USD. AU is the atomic symbol for that of gold. AG, the atomic symbol for silver, which we'll be looking at momentarily after this. So the breakout in here on the 18 average, how does the story play it? Well, there was one leg higher, and then the sideways consolidation. And then another leg higher, and, well, sideways consolidation. That's the current one right now. Resistance on the short term has most certainly been very active in this general area here. But where's support been coming in play? And support has been coming in play within the 18 average of lows. Right now, it is lifted off from there in yesterday's session. It is hanging in there right now within the 18 high, still in the general area of the upward end of this sideways channel. You can call it an ascending triangle because there's been higher lows, and for the most part, matching highs. Rather, though, I mean, the first two were matching and the last two were matching, but these two are lower than those two. It's almost kind of sort of descending, or sort of symmetrical, rather. Descending on the highs, of course. And when we take a look at this on the weekly chart, of course, getting above this major level of resistance from the rally. This is going back to October when it was down to below 1200. So it got above the 18 average. Well, it got above it here, successfully corrected it at the end of 2018, and really showed a lot of weakness. We'll call it. I hate to call it weakness. It flirted large within the 18 lows. And the reason why I say I hate to call it showing weakness on the 18 lows is because I reserve that for a bear market. So if the 18 average is in a declining motion, I can hear this would be showing weakness, sort of. I mean, but yeah, that's in this area here. It's just showing, it's just hanging in there within the lows. If it's in a bull market and it's grinding the highs, I'm showing that as strength. If in a downtrend, if it's, I mean, in this case here, I mean, this wasn't showing weakness at the 18 lows because it was well below it. But if it was just grinding along there, that's what that would be. Anyway, enough about that. On the monthly chart, of course, it's been exitation on the last month. Will we have a pause month? Will we have a little bit of a correction? Or will we have a continued progression higher? And those are really the only three options for the most part. Right now, it's a pause. Price action has matched the previous month's high. The lows are most certainly not even close to coming back to where it needs to come from. And it doesn't even need to, but if it decides to desire to do such. And a good comeback move would be around 13 and a half area, but that's, of course, if that event takes place. In a situation where this has a clear break of resistance because of the correctionary mode we've been having on the daily chart, you have to give the benefit of the doubt to the buyers and possibility for very aggressive moves. The gold to silver ratio is what I'm going to look at next. And it's four decent red down days in a row. 1.19% on the 15th. On the 16th, 1.58. Well, basically Monday to Thursday. Yesterday, Wednesday, 1.14%. And so far today, 1.42%. It has given back the amount of gains gold endured from May 28th up to July the 12th in just those four. And it's still just a portion of what gold has been overperforming from this level. And when we take a look at silver next, it's having, well, it's now five green up days in a row going back to July the 12th. Today against the dollar, it's up 0.8%. Yesterday, it was up 2.64. And the day before that, it was up 1.1, 1.2. From this low, we see it at about 14, a little 14 and 3 tenths, and now it has managed to get up to, well, better than 16 and 1 tenths. So that's a differential of 2 and 4 fifths. One and uh, 1 and 4 fifths. 1.8. That's 12, 13%. And it's interesting in saying that because it used to be back in a time where I would say, oh, how volatile silver is in comparison to a lot of these other markets. Well, a couple things have changed. One, cryptos have entered the scene, which of course it's really setting the bar for high volatility. And the volatility in silver is obviously lower than where it once stood before. For the monthly term time frame, we're looking at a log scale. The size of these candles in here compared to the size in here, we're in low volatile times. Even the volatility here compared to the volatility that took place in 2016, much more smaller. We got the volatility here in 2013. The size of these periods, and they have been this small really since, I would say, into 2017, right around here. And they were not too great even before that. I mean, this was that flash crash day, but at time it's going to pick up. And a lot of times when you lock the volatility in, or when you go through an extended period of the low volatility, it seems to me that the when it's ready to go, thus volatility, it could come in at higher rates and higher amounts, more aggressive because of that situation. So the overall movements for it, you know what? It's still doing its thing. It's got a long ways to go for all this in here. If you look at from June 18th to here, you can make a double bottom formation. A double bottom is like two U's, two V's, and that type of look. If we take a look at this, say on the weekly, can we see the double bottom clearer? Yeah, this is so. This is the first one, and this is the second one. So now price action, of course, up to the neckline, and within it. Okay, this is what do we do here? I don't know because a lot of the things I see in spots like this, if it's bearish, well, at some point it's just going to go down. But not including all the bullish situations. If it breaks this resistance, this thing could just keep flying and we could see it rip to the 16s like it's no tomorrow kind of deal. That wouldn't be a surprise. But we're at an area where we're probably supposed to get resistance. And if you get resistance, to what degree? Would it be resistance that just goes sideways and hangs in here maybe for about a couple of weeks? Just a couple pause weeks kind of deal? Do we have price correction down? And is it down to, say, maybe 1540, 1542? Does it meet up with previous where we came from, an 18 average kind of deal? And that's why I call this area situation I'm not a big fan of because it's a big move. A big fan of in predicting what's next. Because it's a spot where you have a big key high, you have a price correction that's good, you get back to that previous level, and you're most likely, and you, in this case we are, overextended when reaching that level on the daily time for 3 day time frame rather. Nicely well extended, of course, above the 18. Nice leg higher from this established level of resistance at 15 and 5 ninths. And it's when you talk about the three little bears, not too small, not too big, just right. Well, it's getting to the point where if it goes bigger, it would be too big. But that's exactly it as far as technical analysis. If you don't find resistance in areas where you're supposed to, the potential and probability odds for larger volatile plays and moves will most certainly come into play, or be more likely in that sense. Now on to Bitcoin, which is in at 9,475. And of course, this is where volatility will lie. As all these other markets, gold, silver, pick your stock pretty much, and it's nothing like this. And volatility, as I said before, can go low to high, and this was where we had low volatility. And this is where we're having higher volatility than we did back here. And then the volatility back in here, I mean, this was taking the cake for microscopic volatility, then the big wave lower and high volatility. No signs yet of volatility coming to a halt as far as to that of low. When I say halt, I mean low, like it was in here. Within the Fibonacci, this was not resistance in here. It's when we look at this shorter term, it's most certainly is now. The last time before now that we've had resistance at, well, we'll say around $9,800 would be back in early May of 2018, because it didn't resist it here, and it most certainly didn't resist it when it first came up towards it. And if you would have asked me back in here, you know what, I think we're going to resist around $10,000 come July, I'd be like, you know what, that would be impressive if it does it. But I would be saying it would resist it on the way up, not after a move on the way down, resisting a move on the way down, thus lower high. So where do we see this lower high and more clearly? Well, here's the daily. We can see now that we are on day number 2 since the decent sized red down day, which broke through what was originally support on July the 2nd and 1st, as well as July the 15th. For on July the 15th, looking at the candle as it is, we can see this line was a pierce above that low. Of course, the low comes in at 98.14. When we look at the upper part, it says L985, or excuse me, it says, yeah, the low is 98.57, which meant it was only 43 basis points above. That's pretty much a matching hit, close to a small pierce above. But the market rallied up to this, where it came from. And when you see this quick move down, it's either the failed breakdown or resisting that level. And obviously it resisted in the 18 because the next day it followed through. And we're seeing 2 days going sideways like this. Let's take a look at this on a more shorter term time frame now. And we can see Fibonacci being support on this one. So we're resisting a key level pretty much in the same area. We're supporting it. We're pretty much in the just tangling in within that. Wait a second. This is. I didn't mean to get Poloniacs up. I don't remember when I put these lines in. I mean, it's just luck that it hit it as support, but what I meant to do was get get the Binance one. And of course, it's resisting this one. Okay. Yeah, because I knew the lines didn't look as I was expecting. And Poloniex is even worse for the short term time frame. Amongst the 3-hour chart, we can see there's a support, there's a rally, pierce below, and pierce. That's odd, but it's a pierce below here, or pierce less. But as it goes, you can see you're in that. This is that bearish situation, the exact same opposite of what's going to happen here? We're going to find support. Will it be a bottom? Of course, that's the key one. And yeah, probably not, but it could. Meaning it could go way higher, is another way of putting it. Or do we have support where we come up to here, maybe we go sideways? Well, it was none of that. It was a good fast move to the next level. And now we're resisting it. It's been about 7 or 8 periods on the 3. Close to a full day. A good portion of a full day. And resisting 98.33. And this period, it's breaking down away. It's gotten down below the 18 lows, but yeah, whatever. I mean, it's in that general area. On the single-hour term time frame, that big move happened the previous hour. It is 9:35 a.m. as I'm doing this. So this happened on the 8 a.m. hour, as we had within this decline from this top at 12.8. There has been now 3 failed rally attempts to do within it. The first one was the only time where it didn't come back to where it came from. Down in here, we go with that. We see it going down. There's your failed rally attempt. Of course, where we came from was pretty much around 12.1 to 12.2. The high was 11.8, 11.9. And then I'm not going to count this as an attempt in here, but this was most certainly an attempt. It had a sustained move above the 18, but only one good leg higher. And that one good leg higher was where it came from in here. Thus, it was a good decline. So there was that failed attempt. And then a leg lower here. And then again, coming back to where we came from here, and now that we've already had this red candle down convincingly, and even for that matter, 23 minutes left to go in the hour, it's pausing in. My general rule, I notice, and it's not really a rule, it's just observation, I guess, is that maybe about a third, 40% of the way through, the more times than not, the beef of the candle and the story for that time frame is going to come through. So 20 minutes into the period, 30 minutes into the hour, we should really get a clear understanding of pretty much where we're standing. We can see it just pausing and holding in there within that 22 minutes left, telling us that this is a failed rally attempt and it's most likely kind of come back to where it came from. Well, it pretty much is already almost there. I would expect it to go down to 92.70, whatever. It's another test of this area. We can, well, but basically, I guess if you count this low, it's what do you count from like 93.60 down to what the low actually is at 9,051. But again, as I'm mentioning, that to say that we're resisting 10,000 on July the 18th, given where we were on January the 1st and March the 31st, and even for that matter, April the 30th, this has been a very, very good rally. And within the monthly, it's showing that, hey, it's not resisting in this area. We were in an amazing uptrend here. The amount of periods, November 2015 to the end of 2017, almost two baker dozens, a baker's dozen and a dozen, 25. And then to look to start what, this could be period number 2 of the next one, because this would be one on the what would be the resumption of a bull market, as was this, because this was an amazing uptrend to get to here. It wasn't a reversal of a downtrend because it never did hit a downtrend on this time frame, which is fine. I was gonna do the stock market, and I'm gonna do it just to prove my point. I was gonna do it. Then I decided not to do it. Now I'm gonna do it just to prove my point. To say it's fine for a market to never be in a downtrend, especially if it's priced in against a fiat debt note currency like a US dollar and every other world currency, euro, Canadian dollar, Aussie dollar, so on and so forth. Let's take a look at the Dow. It's one of those typical days where it gaps lower. And then on the 3 hour, it's yada yada yada. Nothing. Let's go right to the daily. Hey, it's in a little bit of an uptrend. Correctionary test may be coming in play, but as I'm mentioning, never in a downtrend. At least not since 1929, 1933. And even then, that was just one large leg lower. It kind of almost was not much of one. There's monthly. It does got a nice breakout pattern showing, like it's going to have another leg higher. But it is well overextended. On the quarterly chart, I can go yearly on this. But where do we have any bear markets? And this was just so large that it's you either got to count that as a very short very short aggressive bear market, or a bamboozle of a failed breakdown. I mean, bamboozle big time. So since this event, we'll call this as reversal of trend going above 200. Okay, we reversed it to a bull market. Every time the 18 comes in, it's a correctionary phase. Okay, establish a level of support to revert the trend, breaking down below 634. Failed breakdown, you can't count that. You can't count that. Oftentimes, from failed moves lower comes fast moves higher. It took a long time to happen here, though. Yeah, fast move though. 1980s, 1986. So 1987 market crash, maybe not even close. Just the full end of an 18 lows correctionary phase on the quarter. Okay, so establish support. Another failed breakdown, but again, yeah, that's oftentimes where failed moves can create fast moves in the opposite direction, and there we have it. Now, another way of looking at this is, oh, we're up a lot. Yeah, well, you're up a lot until it finally stops going up. I don't think I'm going to be able to do what I want on this. Nope, that's not even the right thing I was looking to. I'm trying to draw a line, but what I'm trying to state here is the size of this is what? Equivalency to. Well, I mean, I can do this by mathematics as far as both time and dollars. But where are we at? Like here? You could have been saying back when it was 3,600 Dow, oh, it's way up too much. And it was. But it didn't top until over 10. So as far as numbers is concerned, it's had a move of 6,000 and change was the low. 6,600, I think. 6,470. So let's say 65. If we double that, that's 13,000. If we double that, that would be 26, 27. So it's a 4x move from here to here. A 4x move from here at 775, 1,500, 3,000. So in that general area, even that number was even higher, but okay. As far as time is concerned, well, this was 2009, so we're now 10 years into this bull market. At this stage, 1982, 10 years would have taken us to 1992. So that's just another way of looking at markets that are overextended. Thank you for tuning in and have yourself a great day. Bye-bye.